How's it going, guys? My name is Franca and welcome back to the channel. Today we're going to be taking a look at the Bitcoin 4-year cycle. We're going to be asking ourselves the questions: what is the 4-year cycle? Why does the 4-year cycle occur? What is the effect on the price of Bitcoin? And how can we ultimately use this information of the Bitcoin 4-year cycle to benefit ourselves and help us trade Bitcoin? So with the first question, we're going to ask, what is the Bitcoin 4-year cycle? The Bitcoin 4-year cycle is a theory that the price of Bitcoin will experience a similar pattern of appreciation and depreciation over the course of a 4-year period. So basically, every 4 years, Bitcoin is going to see a very similar price pattern. So if we go back to that chart we just had up on the screen, very simply, it's pretty well 3 years up, 1 year down, 3 years up, 1 year down, 3 years up, 1 year down, etc. and so forth. So we can kind of see this in action here. We'll start off with the first bear, the red box. So you can see here we got approximately 1 year down, or not quite. It's a little bit short, but where are we? It starts at about June 2011, roughly May or June 2011, and it goes down to November of 2011. So a little bit shorter, but then we can see here we go from November 2011 up to November 2013. So roughly 2 or 3 years up, and then we go down for approximately a year. So you can see here December 13 to or December or January 14, 15, so roughly a year, and then so on and so forth. It continues roughly 3 years up, roughly a year down, roughly 3 years up, roughly a year down is where we are right now, right? So we just had that year down. So you can see this kind of playing out over and over again. And the person who's made this chart, I didn't make this chart, but you can see here they've kind of broken those each year down into like a different part of the 4-year cycle, where we've got a bull market, a bear market, which comes into accumulation, expansion, and then rinse and repeat. So that's pretty well the very simple, it's just on your screen. You can see the 4-year cycle in effect every 4 years so far for the last, since 2009, when Bitcoin came out. I guess when it was created, you could say. This 4-year cycle has pretty well continued and hasn't broken down as of yet. And you can see now where we are here. We're right into that accumulation phase. So we'll get into that later, but that's a very simplified version of the 4-year cycle, and that's just how the price action works. All right. Now, next question is, why does this occur? So why is there a 4-year cycle occurring? Because, pretty well there's no reason this has to happen. There doesn't, why is it continuing to do the same thing over and over and over again? So I've written here, whilst there is no definitive answer as to why this price action occurs, there's no doubt the Bitcoin halving has some impact on price. All right, so what is the Bitcoin halving? For those of you that don't know. So I've got this article here from Investopedia, and I think they probably do a better job of explaining it than I can. So after the network mines 210,000 blocks roughly every 4 years, the block reward given to Bitcoin miners for processing transactions cuts in half. This event is called the halving because it cuts the rate at which new Bitcoins are released into circulation in half. All right, so we're going to skip this middle paragraph here. It's not overly important. The halving event is significant because it marks another drop in the rate of new Bitcoins being produced. As it approaches its finite supply. In 2009, the reward for each block in the chain mined was 50 Bitcoins. As of April 2023, about 19.3 million Bitcoins were in circulation, leaving just around 1.68 million left to be released via mining rewards. So, pretty well, I've got written here, simply, oh god, don't correct my grammar, simply Bitcoin miners validating the network transactions in return for Bitcoin as a reward will receive half their previous rewards. So Bitcoin miners are the people who are using their computers and their GPUs or whatever they're called to validate the blockchain, each block every 10 minutes getting validated by someone using their computer, and then in return they receive Bitcoin, because obviously it costs money to have your computer sitting here and constantly mining Bitcoins and figuring out the mathematical equations, whatever else, to validate the transactions on the blockchain. And in return for that, people receive X amount of Bitcoins. So obviously, as they've got written here, in 2009, the reward for each blockchain mine was 50 Bitcoins. So in 2009, if you were mining Bitcoin every 10 minutes, someone would be rewarded with 50 Bitcoins. And every 10 minutes, that would be getting added to the supply. So you can imagine, 50 Bitcoins, that's a lot of Bitcoins now. But, every 10 minutes, there's 50 Bitcoins. So 20 minutes, there's, 100 new Bitcoins on the market, constantly, inflating the supply. But to make sure, or the inflation rate is kept down, as they kind of put it as a, I don't think they say it here, but kind of keeping it almost deflationary, is where every 4 years or 210,000 blocks, the rewards rate for those Bitcoin miners is halved. So you can see here, November 28, 2012, in 2012, it went from 50 to 25 Bitcoins. So everything was the same. You'd be mining your Bitcoins, but instead of receiving 50 Bitcoins every 10 minutes for your efforts, you'd only be receiving 25. And then so on and so forth. In July 9, 2016, that went to 12.5 Bitcoins. And then this is where we are now, May 11, 2020, where current Bitcoin miners are currently receiving 6.25 Bitcoins every single 10 minutes when the block is validated. So what's basically happening here is that every 4 years, we're seeing the supply of Bitcoin not actually get reduced, but the amount of new Bitcoins coming onto the market is significantly reduced. Well, obviously by 50%, it's getting reduced every 4 years, which is quite a shock to the market, you could say. But obviously there's some sort of anticipation for it. So it's not actually a shock. It's not, the miners aren't going, oh my God, where's all my Bitcoins or everything? Because obviously we know this is going to happen. It's all in the white paper. So there's some sort of anticipation for it, and we know what's going to happen. Okay, so we know why the 4-year cycle is kind of occurring, because of that Bitcoin halving, because every 4 years the halving occurs and it has some sort of, effect on Bitcoin. But how exactly does this affect the price of Bitcoin? Why? Okay, every 4 years, the new amount of Bitcoin coming onto the market is getting reduced by 50%, but how does that actually affect the price? So I've got written here, the halving acts as a supply shock. Suddenly less Bitcoin is entering the market. So that's what I was saying just before. It's not actually, there's not less Bitcoin on the market, but, miners and everyone who was previously probably selling their Bitcoins to make a profit and whatever else, suddenly there's a whole lot less, getting put onto the markets to be sold in order to, fund their mining operations and whatever else. And it kind of creates a supply shock. And if you do simple economics or business or maths, when the demand is greater than the supply, price will increase pretty well. So or if demand stays the same in this case, hypothetically, if the demand that's what I've got written here, supply is decreased, or slowing, and the demand is presumably the same, price increases. So this isn't affecting buyers as per se. It's affecting the supply, which will ultimately increase the price of Bitcoin. But as we were also talking about before, the Bitcoin halving also has the anticipation of a price increase, meaning more people are buying before the halving occurs, hence why we see consolidation and price expansion prior to the halving. So let's take a look at that. So people know, because we know the 4-year cycle or the halving is going to occur, people are, preparing for it. They're thinking, well, if, there's going to be a supply shock in 2 years' time in the Bitcoin market, there's no point of waiting 2 years to buy then. I'm just going to buy now, and I'm going to hold it out, and I'm going to hope to see even further gains. And that's kind of what we're seeing on this chart here. So you can see each line represents a halving. So 2009, 4 years from there, or 210,000 Bitcoin blocks. Take us to 20 or early or late 2012. Yeah, very late 2012. You can see here the halving and then the bull market. The halving and then the bull market. But what's happening before that is there's an anticipation of the Bitcoin halving. People are accumulating prior to the Bitcoin halving. People are buying up in anticipation of it. And then eventually, when it finally occurs, this is probably when you're getting your late. This is when people are basically too late to the party. They're missing out. They're probably buying up here. The dumb money, the retail. The people who are getting on the Dogecoin hype trains and whatever else. They're buying up around here because they're going, oh my god, Bitcoin's pumping. The halving just occurred, and we're gonna run up for another 4 years or whatever. It's not how it works. People are buying years in advance, prior in expectation and anticipation of the halving, and that creates extra demand. So if we think about this yet again, supply and demand, the Bitcoin halving is creating anticipation, which equals more demand. So when demand is greater than supply, price increases, right? Which is where we get to our expansion point. And then the supply is, well, not reduced, but as we said, slowed significantly, in a sense reduced, which means, yet again, if supply is reduced and demand is staying the same or even increasing due to the anticipation of the halving, this is where we get our bull market. And then eventually we get a blow off top, and all the people that bought down here sell for massive profits, and people who are late to the party, your retail buyers, your dumb money, they basically just get left holding the bag, and then they probably sell towards the bottom because they think it's all over, and then rinse and repeat. And then we get the accumulation phase in anticipation of the Bitcoin halving. Demand increases, it's greater than supply, price increases. It continues over and over and over again. It's pretty well the same thing every 4 years. So it's pretty well people are buying in anticipation, creating more demand, and the supply is getting, or the halving creates a supply shock, which creates further price increases for Bitcoin. And this occurs obviously every 4 years in tandem with the Bitcoin halving. So the most important question, I've left this blank because it's a bit of a tough question to answer. How can we use this information? So we know about the Bitcoin halving. We know where we are in the Bitcoin halving. How can we use this to invest our money smart, make more money pretty well in the future, and create a successful strategy? Well, you can see here, if I was solely going off the Bitcoin halving theory and the 4-year cycle, we are in an accumulation phase. This is a little bit of an old chart, and you can't quite, that only goes to January, I think. Only goes to January, and it's currently May, so there's a few more bars that probably should be there. But we are in the midst of the accumulation phase. This is where the smart money, the institutions and whatever else are probably buying Bitcoin in anticipation of the Bitcoin halving in the coming years. We're expecting, we've had our 1 year down. All right, that's pretty good. Now we start to accumulate. And then we, accumulate all through the bottom here. And then we will sell sometime at the top later. Now, of course, I'm not saying buy here. I don't know what's going to happen with the price of Bitcoin. And you probably shouldn't be solely following a cycle like this, because you never know, it might fail. It's not 100% guaranteed that, this is just going to rinse and repeat forever, and you're just going to buy at the accumulation point and then sell at the peak of the bull market and make, millions of dollars every year, because, it's that simple. If it was really that simple, everyone would be doing it. It's going to be quite difficult, to be buying in these accumulation phases, because as you can see, I don't think we can zoom in here, but the accumulation phase that started on January of 2015, it lasted, so long. It lasted almost the entire year, up till October, so what's that, 10 months of just sitting and holding and the price just going up and going down and going up and going down, and your portfolio not really growing. And that's where a lot of the, dumb money is going to get shaken out of the market, or price could dump, and it could actually, the whole 4-year cycle could fail. We really don't know. So it's important that you're not just following the 4-year cycle. But how could we use this information even further? All right, so let's have a look at this chart. This is pretty well the same. These lines here, though, aren't the halvings. These are just what they've got down as the 4-year cycle. So pretty well you can see, 3 years up, 1 year down, 3 year up, 1 year down. So you can see here that they've kind of got this projected out another, 8 years essentially. And you could say that, okay, I'm going to buy here, but they've actually, it's kind of interesting as well. They've got theirs a little bit later. They're saying that we're still in the 1 year down until, well, what's that? Or is this a bit of an older chart? I think this is a bit of an older chart, sorry. So we're actually about here. We're in about May of 2023. We're probably a little bit under the accumulation point. We're probably around here somewhere in terms of price at the moment. But you can see that we've had our 1 year down. We're in the accumulation phase now. And then we're going to enter the expansion and then eventually the bull market. So we could say that, okay, 2023, you can see Jan 2023 through to, November 2023. That is our accumulation though. That's where we want to be buying Bitcoin, holding our Bitcoin. The expansion phase, you could still be buying it. You might as well. It's still got a lot longer to run according to the 4-year cycle. So you could be saying, I'm going to be buying in, here, from here, January 2023, or we're in May now, but all the way through to January 2025. Maybe you want to set up a dollar cost averaging plan. Maybe you just want to, when you've got a bit of spare change, throw it in. However you want to do it, you could be saying, we want to buy here because the 4-year cycle says that we're in the accumulation and entering the expansion zone. And then during the final bull market, you're probably not going to want to be buying. So you could say, okay, I won't be buying during 2025. And then eventually I'm going to want to sell, late 2025. You can see here that we got, it's pretty well December 2025. And then January 2026 is where the bear market's going to start. And then we're going to head down. Price is going to get lower and rinse and repeat. So based on that, what do we got? So we got buying Bitcoin from now till 2024 pretty well, or, partway through 2024, and then eventually selling very late 2025 or early 2026. So that's how we can use the Bitcoin cycle. Of course, that's not an entire plan in of itself. You want to have a dollar cost averaging plan, whether that's like, I'm going to buy $50 a week no matter what. Or maybe it's like a pyramid plan where you're saying if the price drops down, I'm going to be buying more, or if the price increases, I'm going to be buying less. There's a lot of ways you can come up with a plan, but it's most importantly that you have a plan. You're not just saying I'm going to buy now and hope for the best and hope that the 4-year cycle works out, because that's how you're going to get wrecked and you're going to probably be emotional in the market. So you want to have a plan, stick to it, and of course there needs to be some sort of if the 4-year cycle doesn't work out, because it's not guaranteed. And I can't really stand here and say, I 100% guarantee that the 4-year cycle will go up and it will continue forever and ever, because I got no idea. The price of Bitcoin can do whatever it wants, but pretty well, you can see here that we are in the accumulation zone. So there is definitely the possibility that we are in the time to buy, is what the 4-year cycle would say. Alright, so that's pretty well going to do it, guys. Hopefully you got a little bit out of this video. We've answered the questions. We know what the Bitcoin 4-year cycle is now. We know why it occurs, and we know like the factors of why it occurs, and we know how it affects the price of Bitcoin. Now it's going to be onto you guys now. I can't trade for you or anything, but it's going to be onto you guys to create a plan. See if this is something you want to follow. It might be, it might not be, it might, maybe you're a bit more of a short-term trader. This is definitely a bit more of a long-term investing sort of strategy where you're looking to buy and hold for years. So it's up to you guys. Hopefully this was helpful. If you did enjoy, feel free to like, subscribe. That'd be greatly appreciated. I've also got some links down in the description below if you're in Australia. and you're new to crypto and you want to use, there's a couple of exchanges down below like Coinspot and Swyftx. Feel free to use my referral codes. They're probably the best exchanges in Australia, and you could definitely follow the Bitcoin cycle, the Bitcoin 4-year cycle using those exchanges. Anyways, I'll catch you guys later. Thank you all so much for watching. I'll see you in the next video.